High-tech stocks going down again. Today, I'm going to show you how to use SMA to determine the market's future trend and at what price you can buy the dip for Apple. For whoever doesn't need the future trend part, feel free to jump to chapter you're interested in. So what is SMA? SMA stands for Simple Moving Average. It's the average price over a specific period. Typically, analysts like to use 50 or 60-day SMA to help them determine market confidence on the stock and analyze where the stock is heading to in the next couple of months. First, let's see how you can add this indicator to your candlestick graph on Webull. So on Webull, let's find an example. I'm going to use QQQ as an example. QQQ is ETF for Nasdaq 100. No, Nasdaq. Yeah, this is the one. And you click on indicators, edit indicators. You can see MA stands for moving average here. Click on that. On the right side, you see you're able to input 6 moving average line altogether. These are the specific period you want it to be. So we're interested in the 60-day line. So one of them is 60 already. I don't have to change anything. Then you click on this style. And here you can include whichever one you're interested in. I'm only interested in the 60-day one. And pick a color you want and click on done. And then you can see this moving average line show on your candle graph stick. So if you have some supporting level knowledge, you could come with the conclusion that this looks like a good supporting level. The downtrend could end here. If not, I have a video talking about that. To tell the truth, this is only a good technical supporting level. Value-wise, this is not a good supporting level. Most tech stocks are still overvalued at least 10%. The reasonable supporting level is here at 240. This is just my opinion. If you're really good at technical analysis, you can try to buy high-tech stocks now, little by little. If you fail, then retreat to 240 and start buying tech stocks again. 1QQQ is in this area. The bottom limit is 210. However, if it really reached 210, then it's going to ruin the market's confidence. There will be lots of people dropping out the market, and the market will stay down there for a long time. That will be a completely bear market. You might say the V-shaped turnaround miracle could happen again. Well, if miracles can be duplicated, it's not a miracle. If it really gets down to the 210 level, not much money would want to enter the market anymore. Every day there might be a less than 1% movement, and it's going to vibrate and stay there. People probably would rather choose online casino. From now on, the bulls will try to hold around 260. There is a chance the market may turn around, although I don't see it now. 240 is the level where I will start investing heavily into the tech stocks. Before that day, there are other stocks like industrial, airlines, banks, etc. Some are risky, but there are lots worth buying and waiting for the recovery. Lately, there are lots of bull traps for high-tech stocks, including Apple. So let's look at Apple's graph. In order to show this better, I'm just going to use a line chart instead of a candlestick. Okay. This bull trap was a bit different than the previous few days because all the rebounds happened in pre-market. So you can see at around 6 o'clock, it reaches the highest point, about a 1% increase. And once the market opens, you can see it's a great calm down without any coming back. You can say that. That's a big sharp drop. You don't even have chance to get out. even worse than Wednesday and Thursday. At least there were some relatively strong rebounds in the middle of the day. I guess just too much tech bubble in high tech stocks. So this downtrend is even sharper than expected. Same thing happened for Amazon. Pre-market, it rebounds for over 1%, but then in the daytime, it's down for over 1.7% in the middle of the day. Same thing happened for Facebook. Yeah, Facebook, that's an even sharper increase, over 2% rebounds before pre-market. And then you can see it's coming down sharply during the day. All the bull traps for those high-tech stocks looks very similar. Well, March's crash didn't even leave you time to feel the pain, but now you can feel it since it's trending down in the long run, having some fake rebounds, luring you to get back in and then get trapped again. After a few times, you found yourself short of cash and became very loyal shareholders. Now, let's analyze Apple. Let's see, where's Apple? Yeah. You can see Apple recently it got to historical high, $138, and now it's 106. Well, is that a reasonable price? Is the downtrend over? The answer is no. What's the reasonable price then? Right? At what price we're gonna get in again? From before the splitting till here, they were going up really fast, really quick. Barely any support, too much bubble. Lots of analysts have given out their estimation for Apple's price range. But before getting into that, did you buy Apple recently? If so, at what price? So let's say if you buy above 130, you might not have a lot of experience in the stock market. Most likely you got into the market this year as a rookie, and you got affected by the wild mood too much and no concern about risk at all. It's very likely this is going to be the highest point for the next little while. Then I know a lot of people get in around $120, plus or minus 3, makes it 117 to 123. It's unfair to blame them. On September 4th, there is this very positive signal showing it could be a turnaround, but there wasn't any turnaround proved later. And the day after, another turnaround signal, but again proved fake. So whoever got in around that point or trapped around $120, I can only say they were cheated by the market. And the last group was trapped around 110. If you were trapped at 110, it's not a big deal. And first, 110 is getting close to the technical support at 60-day SMA. We just analyzed that before. And then people were hoping to get some good news from Apple's press conference. Also, according to the analyst estimation, 110 is close to the upper end of the price range. So long as you have faith for Apple, you can hold it long term there, no problem. Apple is a great stock. Even if you made a mistake and got trapped, you can still hold on to it. You didn't lose money directly. The only thing you lost is valuable time. Can Apple's stock price go back above 130? Of course, but it will be long, at least a few months. Can it go back to 120? Sure, even a little less time. Can it go back to 110? Definitely. If we got some good news in October press conference, I think it will get back there. So coming to the reasonable price question, Where is Apple going to go down to? Where are you going to buy it? They need to close the gap, this big gap here. Okay? The next supporting level is between $95 to $100. Personally, this is a reasonable price range. I would buy some if it gets down there. Theoretically, it can go down to as low as $80, even here. But 95 to 100 is reasonable. In the stock market, looking for a reasonable price is a lot easier than to try to buy it at the lowest possible price and sell for highest possible price. It's just mission impossible. Reasonable price assures you good financial cost and time cost. It's easy to understand the financial cost, but time cost is important as well. For instance, if I bought Apple here around $95 to $100, then in 6 months the price went up to $130, overvalued to me, maybe 25% or 30% over. Then I'm happy collecting my 30% and walk away. In the meantime, you bought at 130 and held it for 6 months. Are you going to sell it? Probably not. But then how many stocks can go up another 30% right after this, right? There's very likely a 20% or even 30% adjustment where your money will be held another long period of time. If I saw the adjustment happening, I might jump back in and buy the dip again. That's the right rhythm, but it's because I bought at the reasonable price range. Some people may say, hey, you're at most a swing trader, not a long-term investor. Well, it doesn't matter to me how good a stock is. It can be Amazon, went from like $10 to $3,000. If it went beyond my reasonable value range too much, I have no problem selling it, walk away. When there's a mean reversion and the stock price comes back, I can buy it again. You might be afraid of it keeps going up and you have no chance to get it back. Buddy, that's called greedy. Remember, you can't earn every penny in the market. Besides, if it keeps going up, either I change my understanding, set new value for it, and purchase it again, or I just choose something else I understand better. Playing stock is unlike playing lotto. You're buying one number the whole life. There are just so many choices, right? Okay, if you find this video helpful, please like it, share it, and subscribe to the channel. Thanks for listening.